All right, let's talk about more moves. Kevin Simpson's busy man. You bought more McDonald's. Why'd you do that?
Looking for a diversified portfolio and broadening out. We've seen a lot of analysts upping their price targets on McDonald's to $330, $340. You know, that would be wonderful, whatever happens. I see the stock kind of go up to $310, lag, rollover. Amazing dividend, strong dividend growth, and they really understand their consumer. They're bringing things online, bringing back the snack wrap. I think there's a lot to like about McDonald's. It's a tepid price target for us, but if it goes to the higher end, we'll be thrilled.
What do you think about the commentary that's been had, certainly of late, within restaurant stocks? Because it's been overwhelmingly horrible. The stock movements, you take Brinker out, and maybe here or there another name. What you're hearing from these companies, what you're seeing in terms of their comps.
Very specifically, I think that McDonald's becomes a beneficiary of that. So if there's a trade down, it's a lower end consumer. They know how to price the product. And I think people enjoy the French fries. Not that that's a reason to buy a stock. But
well, that's a really great fundamental analysis, Kevin. Thanks so much.
It's a trade down. It's clearly a trade down. That's for sure. You have to believe in inelasticity surrounding these tariffs and the effect on consumers not to be present. The effect on the consumer is real. You're seeing it. Services beginning to spike, and quick serve is going to be challenged if that's going to be. In
all seriousness, there's an international component to McDonald's also where they're seeing an incremental increase in sales. So this is a global company that I think is something that.
No, they benefit. Clearly,
for sure.
It's idiosyncratic. They benefit in this environment, but the others,
right.
The Kavas, the Chipotle, even Shaq is pulling back.
No, but there are others who are in the fast food universe who have seen their comps come in disappointing, and the commentary hasn't been great. So how do you square that? This is not McDonald's
that's Kava, and that's Chipotle, and that's a higher price
I said fast food. I'm talking about others in the comp.
Shake Shack, Wendy's, yeah.
Wendy's,
well,
you could ski down the short of Wendy's.
That's what I'm talking about.
Yeah, you're right.
Shake Shack's a higher price point than McDonald's or a Wendy's. I'm talking about the Wendy's of the world and others in the fast food space. We're not talking about McDonald's versus
I think Wendy's
Chipotle.
is maybe the only competitor that you can really think of, and they're doing horribly. And I think it's the global footprint and just the ability for McDonald's to understand the lay of the land.
You're absolutely right. I mean, if we could can you pull up Jack in the Box? You look at that chart.
That's what I'm talking about.
Like, it looks like, again, you could ski right down that slope. So there clearly
That's value.
There is an effect right now for sure.
Do you want to own McDonald's?
I don't own McDonald's. I do not own McDonald's.
Do you not like buying more of it?
I think from a technical perspective, McDonald's.
We're trying to have a debate here on whether this is a good buy or it's not.
McDonald's,
either we want to have it or we don't.
McDonald's, to me, looks technically in a better position than all of the stocks we've spoken about. Kava, I think Shaq looks okay, relatively good. I agree with Kevin that if the consumer trades down, McDonald's maybe benefits slightly from that. But I also 100% agree with your point that overall fast food is going to be challenged over the next several months if what we are seeing in the economy with labor and with tariffs continues.
Because I'm not saying that McDonald's won't be a beneficiary of any of that. I'm simply asking you, how do you square it with what we've heard and seen from some of the companies that play in that same exact universe?
I think I own the best of breed, and I try to do that with every name that we own.
Okay.
I think it's that simple, Scott. I just think that they're head and shoulders above these competitors.
Okay.
Yeah.
You bought more RTX, which is interesting. Joe T just sold some of his defense exposure. What do you think?
So we had a called away at 160. We're building that position back out, but I don't think the world's going to become less complicated over the next few years. So if the LMT or the RTX is losing some momentum, I have no argument there. But I think longer term, we've got defense stocks that are going to benefit from global defense spending. And this is a name that I love the name, and I feel very passionately about.
Two new buys you have, Altria and Hasbro. Let's talk about them because we're talking about straight up buying new names. Go Hasbro first.
So here's what's really fascinating about these two names. These are not in our dividend strategy. These are in our growth portfolio, and it's Altria and Hasbro. So you can look at me cross-eyed and be like, how could this be possible when you've got the opportunity to own Mag 7 names? But in the Russell 1000 growth or the S&P 500 growth, there are other stocks in there, and we wanted to broaden this out. Now, if the PPI number had come in better, I think that would have looked nicely. But Hasbro, you get a 3.6% yield. Yes, it's in our growth strategy. 18 times forward earnings. Yes, it's also in our growth strategy. But they control so much in the the gaming part of the world, and we love the millennial trade, the Z generation. Wizards of Coast, this is not a game I'm playing, but it's up 46%. Final Fantasy, just blowing it out of the water. So these are companies, Altria, I don't want to get involved with the smoking or the non-smoking, but it's a perpetual compounder, a cash flow machine, and they're moving away from the smoke tobacco into the other alternative products. But these are companies that I think are set up very nicely. If you look at the charts and you look at the guidance, you've got good opportunity here.
All right.